Welcome back to Small Talk. I'm just going to record a small update on the current stock market situation and what's taking place in the market. Today was the consumer price index data release, the CPI release, and according to the CPI, the inflation is cooling off. Uh, Stock market was obviously pricing in 50 basis points interest uh, rate cuts by the federal government, but the data suggests that we should do maybe 25 basis points at this point, which is the reason why there is some volatility in the stock market today. Tomorrow is the PPI release. We'll see how the PPI release reports. I think the Fed is going to decide mostly based off of the labor market. Labor market is obviously slowing down. People are saying that it's very hard to find a job. The people who have lost jobs, they're not able to uh, get new jobs or get hired by any new company. So there aren't enough jobs available for the number of people that are losing their jobs. Of course, as Federal Reserve always say that they are data dependent. So by looking at the current data and the previous job report that we've had, we know that the previous job report that we got was not a very good report, and that's why the market literally collapsed the day when the job report was released. CPI is, however, was not bad. It's pretty good, but it looks like the inflation has declined to the lowest since 2021. Previously I've been listening to some people and they were suggesting that maybe we are at a risk of recession, but it looks like after all the economy isn't doing that bad, so we're not at the risk of recession at this point. And we don't need 50 basis points rate cuts. We only need 25 basis points. Maybe the Fed will do 25 basis points in September, 25 in October, and then depending on the data, how the data will come up, they will obviously increase their rate cuts gradually, or maybe not. I don't know. You can't predict what the future is going to show us. At the same time, housing market has been pretty stubborn. I don't. The reports that I have read, at least, there hasn't been much changes in the housing market. The houses are still very expensive. The prices are higher. If the Fed cuts the rates, it's probably going to increase the housing prices even more because when the rates are lower, more people are looking out in the market to buy homes because more people can afford them because the rates are lower and there isn't that much inventory. I mean, again, it depends where you live, what part of the country you live. Of course, some parts are maybe a little bit lower, but overall, in general, if you take the average, the housing market has been pretty stubborn. Um, again, economy is not doing as bad as most of the economists were thinking and most of the market analysts were predicting. Economy is still pretty strong, and the inflation stays subdued. Um, of course, while Federal Reserve, Jay Powell is preparing to initiate the rate cut in September. I'm sure that they will have to do a rate cut. I'm familiar of some of the very small minority of the economic analysts who are in favor of not cutting rates at all, at least for next 6 to 8 months. We don't think the economy is going to collapse if we don't do any rate cut. We've already stopped increasing the rates and the economy is just coming back to its normal gradually and slowly. This was the third good report, I think, because earlier in this year, the CPI report was not that good. And then for the past three reports that we've had, the inflation is going down. And the economy is getting better gradually. And they are of the opinion that we don't need to cut rates for at least next 6 to 8 months, which I don't agree with because I feel like it's time that we should cut rates, whether it's 50 basis points or 25 basis points. That's a different story. We will see some volatility in the stock market until the elections, as I have mentioned earlier in some of my previous videos. Tomorrow is the PPI report. Of course, that's another catalyst that has to be out of the way. And then after that, if everything goes smoothly, there's going to be a pullback in the market at the end of October around Halloween time period. It could be earlier because before elections, the markets always tend to pull back because markets don't like the FUD, the fear, uncertainty, and doubt, and because they're not certain who's the new president going to be. the markets tend to pull back a lot. And then I feel like that's a buy the dip opportunity for those who wanted to get into some of their favorite stocks. So end of October, if the market does pull back, which I'm sure it will, get into those stocks that you are looking to get into at that point, because once the elections are done and president is elected, regardless of who the president is, whether it's Democrat or Republican, doesn't matter, the markets tend to go up all of a sudden, because markets don't like uncertainty. And until the president is elected, the market is uncertain who the next leader of the country is going to be, because that really depends. Then that tells a lot about the financial policies and economic policies of the country. So the market gets scared, and people just like to take their money out and keep it on the sideline until the decision has been made. After the election, there's expect a rally in the market, given that everything stays the way it is. Of course, there's never a guarantee, because market just freaks out over every little thing that takes place in the country. Sometimes it just shocks me, like, why is the market down today? Nothing happened. And then you realize, oh, there was this small, teeny tiny news, which is so insignificant that it should not affect the market, but it does. So as always, it's not a personalized financial advice. Be very careful with your finances. Don't buy the stocks if you don't have the means to buy them. If you don't have any extra money, don't put them into risky stocks, because if you lose that, you're going to be struggling with your everyday to meet your everyday needs. I also know some people who would take home equity loans and line of credits, and they'll invest that into the stock market. If you're a pro and you have the stomach to take that kind of risk, even then I would suggest please don't do that, because putting your home, putting a loan on your home, putting an extra lien on your property, and putting that money into risky stocks, you may have tough stomach to take that risk, but then you could jeopardize your shelter in that case, because market could go down. And for some people, it's okay. They feel like, okay, we have extra cash sitting on the sideline. If even if the stock goes down, it will recover eventually, whether it takes 6 months, year, or 2 years, and we can sit back and wait and be patient. But for some people, they are looking for that quick gain. They think they can get home equity line of credit or home equity loans, invest that into stock market, double their money within a fraction of a time, maybe a few weeks or a few months, and then pay back their loan, and they have this much extra cash sitting for them to enjoy their life. But that it doesn't work that way all the time. So please don't make those kind of mistakes. Don't put any money into risky stocks if it's something that you need. If it's extra money and you think you can afford to lose that money, then sure, go ahead and take the risk, but at your own risk. Don't take this as a personalized financial advice, because everybody's financial situation is very different. I'll give you a small example. I don't go to the banks very often, because there is no need to. Everything is online these days. But I had some issue with my accounts, with my investment accounts. So I went to see my broker at Merrill Lynch, not Merrill Lynch, Bank of America. So they have, one of their investment advisors sits there. So I had a few questions for him, and he looked at one of my accounts, which was doing pretty bad. It was like 60% down. And he said, can I ask you something? Do you like investing? I said, yeah, it's fun. He said, you've lost a lot of money on this account. Why don't you just invest this with our financial advisor, with Merrill Lynch, and get it over with and liquidate all your losses and be done with it? So I said, okay, what will happen to my account? Then he goes, then you can, that's your loss, and that will be written under Cordy's, he's my financial advisor, his portfolio, and he can take it from there. And I said, well, if I sell all these, or if I liquidate this account and I invest this with Merrill Lynch, the loss that I have on my account is very valuable to me right now, because if we sell some of the shares at the end of the year and we have capital gain, I want to sell enough of my dead stocks, which are losing money, to offset that capital gain, so I don't pay tax on it. And if I liquidate this account, then I can only write off so much, so rest of the loss will go to waste. So I said, therefore, this loss is very valuable to me as well right now. So I cannot take, liquidate my account, take a big loss, and I don't have enough capital gain to offset that with, which means this loss will go to loss too. And then, so therefore, even your own financial advisor at the bank sometimes don't know your situation. So he couldn't see all of our accounts, because Some of the accounts are just under my husband's name, so he was obviously pulling up my information under my tax ID number, which he could only see whatever I have in my under my name, so he didn't know the whole picture. So don't take people's advice, and definitely don't take my advice, because I'm just a YouTuber who doesn't know much about finances at all. I do it for fun, but I like to share my thoughts. These are my opinions, so you don't have to take my word for anything. But be very mindful and be very wise. Know your own situations, and even if you go meet with professionals, make sure you tell them the entire story. Give them the whole picture of your financial situation in order for them to give you an advice, because they could look at half the picture. They could look at half of your household accounts or a fraction of your household accounts, and they might give you the advice to their best understanding based off of what they're looking on their screens, but they don't know the whole situation for you. So if I was to take his advice and I would have liquidated my account, that would have been $150,000 loss, which would go to waste. But right now that loss is valuable, because if we sell some of the shares on some of the companies that we hold and we have profit, we know we have profit on those accounts, a lot of profit. And if we sell even a fraction of those accounts, I would have to pay 22% taxes, because it's a long-term gain. So in order for me to offset that profit, so I don't pay any taxes, I will have to sell equal amount of loss, so that I can save that 22% on tax. But the gentleman that I met with, he didn't know the whole situation, so he was like, "Oh, okay, that makes sense then, because I don't see those accounts." I said, "Yeah, because those accounts are not under my name. They're under my husband's name, and we're planning on selling some of those equities at the end of the year. And then I would sell my dead stocks at that point, so we can offset the profit with the loss, and then we don't pay taxes." So lucky for me, I have some basic information, some basic knowledge of how the banking system works, how the stock capital gain and capital loss works, but not everybody is of the understanding of these kind of situations. So tell them the whole picture. Make sure you don't take anybody's advice blindly. Definitely don't take my advice blindly. I just like to share my thoughts. I just like to say what's going on and how the market is going to react in the short term, or possibly in the long term as well. So we have three catalysts: PPI report tomorrow, then we have elections. After the election, if everything, and then we have of course, earning reports next month in October. So that's also a huge catalyst. Depending on how the companies are doing, it obviously decides the fate of the stock market as well. So as I said, stock market reacts to every little thing, and it freaks out over every little thing. One bad earning of a big company, for example, Amazon, or I don't know, Tesla, or Facebook, any of these large companies that really decide the future for the markets, could freak out the stock market. So we have three major catalysts: PPI report, the earning reports next month, and then we have election. So these three, once these three things are out of the way, then if everything else stays the same, I think the market is going to rally finally. There's always, of course, going to be small pullbacks here and there, because markets don't just tend to go up every day, but the pullbacks are healthier. They're good for us. If the market is constantly going up, and is going up at a faster pace, trust me, it's going to come down as fast as well. So I hope this video helps. Please share your thoughts. I don't like to record lots of investment and stock videos, because I don't want people to take my advice and think that, oh, I can listen to her and make a decision, because as I said, the stock market, there's never a guarantee what's going to happen tomorrow. Anything catastrophic could happen tonight, and it could collapse the market. But by looking at the current events, at least we can get some idea what to expect from the future, near future and long term. So that's why every once in a while, I do record these kind of updated videos. And especially when the CPI is released and PPI is released, I feel like it's very fun for me to record those kind of videos, because I like to share my thoughts. Please give me your feedback. Please give my video a thumbs up. Subscribe to my channel if you haven't already. Until next video, take care.